The United States is preparing to shake up the global trade landscape. Starting April 2, 2025, the U.S. will implement a new tariff policy. This policy targets several countries, including economic powerhouses like India and China. The goal? To address what the U.S. sees as unfair trade practices. The U.S. aims to level the playing field and reduce trade deficits. This move signals a potential shift in global trade dynamics. It harkens back to the trade wars witnessed during the Trump administration. However, this time, the approach is more calculated. The U.S. is opting for a reciprocal tariff system. This means matching the tariff rates imposed by other countries on American goods. The economic rationale behind this decision is clear. The U.S. government argues that high tariffs imposed by other countries put American businesses at a disadvantage. These tariffs make U.S. goods more expensive in foreign markets. This hurts American competitiveness and contributes to the growing trade deficit. The U.S. hopes that by imposing reciprocal tariffs, it can incentivize trading partners to lower their barriers. This, in theory, would lead to fairer trade and boost the American economy. However, the potential consequences of this move are far-reaching and uncertain. The U.S.-India trade relationship is a case in point. Data reveals a significant disparity in the tariff rates imposed by both nations. India, for instance, has steadily increased its tariffs on U.S. goods in recent years. In 2018, the average tariff rate imposed by India on U.S. goods stood at 11.59%. By 2022, this figure had climbed to 15.30%. This upward trend highlights India's protectionist stance. It aims to shield its domestic industries from foreign competition. In contrast, the U.S. has maintained relatively stable tariff rates on Indian goods. These tariffs have hovered around 3.8% between 2018 and 2022. This difference in tariff regimes is a major point of contention for the U.S. The U.S. argues that this imbalance puts American businesses at a significant disadvantage in the Indian market. This, they say, contributes to the trade deficit between the two countries. The new reciprocal tariff policy is an attempt to address this disparity. The potential implications of this reciprocal tariff policy are far-reaching. Experts predict a range of outcomes, some more optimistic than others. On the one hand, the move could pressure countries like India to negotiate fairer trade deals. Lower tariffs could lead to increased trade volumes and benefit both economies. However, there is also the risk of retaliation. If targeted countries respond by raising their own tariffs, it could trigger a trade war. This would harm businesses and consumers on all sides. The global economy, already grappling with uncertainty, could face further instability. Beyond India, the U.S.'s new tariff policy has implications for other major economies. China, Mexico, and Canada are among the countries in the crosshairs. Each nation has its own set of trade complexities with the U.S. The reciprocal tariff policy adds another layer of complexity to these relationships. The situation is further complicated by the long shadow of the Trump administration's trade wars. The memory of tit-for-tat tariffs and economic uncertainty still lingers. The new U.S. administration will need to tread carefully to avoid a repeat of those turbulent times. The global trade landscape is entering a period of significant uncertainty. The U.S.'s decision to implement reciprocal tariffs is a bold move. It reflects a growing frustration with perceived trade imbalances and a desire to protect American interests. However, this approach carries risks. Retaliation from targeted countries could escalate into a full-blown trade war. This would harm businesses, consumers, and the global economy as a whole. The coming months and years will be crucial. How the U.S. navigates this new tariff policy will have significant implications for global trade relations. The world is watching closely, hoping for cooperation and a commitment to fair and open trade. The alternative, a descent into protectionism and economic conflict, is a scenario that